Hello everyone, welcome to 32Soft's June webinar. I'm Denise, and with me to present is QAD and MRP expert Don Lindsey. Finally, as soon as the replay of today's session is available, I will follow up with our encore email. It will include a link to the replay, all of today's questions and answers. And now, Don, I will hand off to QAD and MRP guru and instructor extraordinaire, if you are ready. Don? Yep.
All righty. Well, good morning, and thank you, Denise, for that kind introduction. Welcome to our third in a series of webinars on how inventory works in QAD. We had our first section back in November of 2019, and we did a second one in February. And then after a couple of service and support sessions, we're off on some more investigation of the superb functionality housed in QAD regarding inventory control. So just to kind of review, in November we talked about some basics: item master, inventory status codes, locations, transactions, and then in February we got into the discussion of the perpetual record, which we'll touch again on today, ABC analysis, cycle counting, and we talked about the physical inventory control process. So today we're going to start off with some discussions of cost considerations in inventory. We're going to talk about average and period costing. We'll talk about PRM, cost sets, mirror accounting, and then we'll cover some new functionality, a little bit new, the obsolescence or obsolete inventory analysis tool and the days on hand analysis tool. Then one of the things I didn't get to in February, which I wanted to, was a discussion of the regulatory attribute control compliance. And we'll talk about controlled substances, then we'll look at item replacement, both item upsell, cross-sell, and then lastly we'll talk about the new non-sales and non-inventory shipping process that's available in the more recent versions of EE. This third session I have discovered after going through it that there's a whole lot more to inventory than I can cover in even 3 sessions. So Alex and I and Denise are planning to talk about EMT, Enterprise Material Transfer, enterprise asset management, which has a whole bunch of inventory stuff in it, distribution requirements planning. I'm sure we're all familiar with that in terms of MRP. And then another subject I was going to cover today but don't have time is consigned materials. So I've got about 4 new sessions already working on for next year. So as normal, always make mention of terminology. My gosh, there's so much new terminology that people have to become familiar with. So we need some good wiki company data dictionary definitions of how you use them, because your company might be different from some other company. And then a solid set of work instructions. How do you actually navigate the menus? What is the setup? What are the schemas that are used, so that when you have new people join the organization, you've got a good tool to train them. So before we first look at inventory, I always hark back to something one of my early mentors told me many, many years ago as I started my career at Beckman Instruments in production inventory control. Dennis Fisher, great gentleman, told me never to forget that the flow of inventory through your organization is the flow of money through your organization. So we're going to talk today about product cost and how we use that for inventory evaluation. We'll talk about cost of goods sold, pricing models, and then some other activities that use cost information, departments, sales orders, sales territories, etc. And it all comes down to the tool that we use in terms of performance management for planning and control. So the flow of manufacturing is the flow of inventory. Starts off with purchase orders. We buy product through purchasing an EP. Then we use that direct material in terms of WIP, work in process, build our subassemblies, our value added. Then that drives into finished goods. So we take the cost of the product, drive that from inventory, and then sell that to our customers to generate margins. So that is the flow of the inventory. So as supply chain managers, we really need to understand what that flow is so that we can control what those are. The things we'll talk about product costs, standards, current, actual, average, direct. There's all sorts of other kinds of costs, transportation, customs duties, insurance, royalties, and QAD has tools available to handle all of these types of costs in inventory. There's basically 5 elements of cost that we recognize in terms of the item: the material cost, labor, burden, overhead, and subcontract. Material starts off, that's the purchased part, and that is dependent on what the material purchase price is on your item master file or your 5.7. You're purchasing maintenance, the quantity per on your bill of material, scrap, phantom coding, your make-buy codes, structure type, and yields. That's going to determine your purchase or material costs. Labor is basically set up and run. So you take your setup time times the setup rate and your run times the run rate. That is going to then be rolled up to the labor content of your item. Burden, what we normally call variable overhead. These are the costs that vary with the manufacturing time. Those are going to be set up in 1.4.9, 1.4.17, the work order rate, burden rate, percentage, machine burden, etc. Then overhead, which is normally referred to as fixed overhead, for such things as overhead salaries, insurance, rent, etc. We can load those directly into our 1.4.9 or 1.4.18. And then we have our subcontract cost category, which is if we process product outside. And as if any of us have listened to any of the multiple blogs out on the internet know about how the supply chain is reshaping itself in terms of its relationship with China, in terms of its relationship with the new suppliers. A lot of us are going to be now dealing with subcontracts. So we define that in the routing maintenance. We normally make the work center equal to our supplier ID, and then in the routing maintenance 14.13.1, we add in the supplier costs, and that then gets rolled up. There are the capability to add as many different item elements or cost elements that you really need besides the 5 of material, labor, overhead, burden, subcontract. I've worked with companies that have duty, freight, handling, insurance, royalties, specific commodity contents that can be tracked as part of that item cost element in your standards. If you use item sites or you use sites other than just the one for your domain or entity, then you're going to use the 1.4.18 to set up those so that you can differentiate the cost between them. The standard cost is normally what is called the GL cost set. This is what the cost or what the item should cost. It's not updated automatically by the system. You have to run the standard cost roll, which I'll walk through in just a second. And this is what generates variances between actual and standard. It's used to calculate cost of goods sold, and it is used to value inventory at standard. There is the product cost roll-up, which basically takes your routing roll-ups, your product structure roll-ups, rolls that up, and then you can copy that from your current or any of your simulated cost sets, which we'll talk talk about into that GL cost set. In order to do the standard cost roll, first you have to freeze the value of the item in the product structure. So 13.12.1 freezes that or sets this so changes can't or can be applied through the routing rollup and the cost rollup. Then you do your routing rollup in 14.13.13. It takes all of your operations against the work centers and your work center rates and your setup rates, and it rolls up your standards. You can include yields if you find that necessary. If your kind of product has a yield factor, you can incorporate those into your standard cost rollup. And then just a word of caution, always make sure that you understand this roll-up lead time. If you check that box, it's going to change the lead times in the item master file, and if your planners and your buyers have set their lead times the way they want to plan, this can cause some havoc. I've been through that process before, and it's not fun. Then once you've rolled your routings, then you do your 13.12.13, your product structure roll, and that rolls up all your lower level load burden, overhead, subcontract, etc., up into the level and establishes your standard cost for the item. That's done in conjunction with the 13.1, 13.5, your product structure. If you use 15.5, your formulas, and then your item and planning maintenance, both for site and item site. Once you do the standard cost roll-up, you should always do your 1622, which revalues the WIP based on your new standards. Or if you want to revalue the WIP based on additional materials that you've charged to work in process, you can do that. Current cost is sometimes just used as a reference to compare standard to the current cost. And there's three basic ways you can do that, either through average costing, last cost paid, or I've seen companies do none in the current cost. The supplier cost, or your supplier item maintenance, gives you the relationship between your part number and your supplier's part number. So that if you've got a price in the 1.19, that can be used as the establishment of the cost in your purchase order. So that 119 is where you're going to define that relationship between you and your supplier base. Again, becoming very important for the changes that we see coming in the supply chain. There is also average costing, which is available. I know a number of companies that use average costing as opposed to standard costing. If you're in a hyperinflationary type of environment where you're based on commodity prices, and commodity prices can change wildly, take example, sugar. Who knows what the price of sugar is going to be, or oil, those kinds of commodities. You might want to use average costing process, or you might just have a basic business philosophy. Your accountant, your CFO might determine that he wants to use that average costing. Company down in San Diego that does a lot of government contracting uses average costing process. The problem with average costing is that it requires much more attention to detail and procedures. It's a very procedure intensive sort of a process, because you must maintain the physical inventory. We've talked about physical inventory and cycle counting in February. And if you're going to use average costing, you really need to have a handle on that perpetual record, because accounting is going to have to measure that. So your transactions are very important, the timing of the transaction. You can't allow negative inventory balances to occur in your process, so you're going to have an inaccurate average cost statement. You set up average cost by simply having your GL cost set to the costing method of average cost. Now you've got to do that through this 30.1 cost and maintenance that I'll explain. But once you do that, then you can use this average costing process. Here's an example. If I start off with $5,000, I buy $3,000 at $20 and use $40,000 in a standard cost, pretty straightforward. I start off with $50,000. I purchase an additional amount and use it at $10. That means I'm going to have $40,000. However, with average pricing, you can see there's a difference in the way that the system calculates that. It's going to take your 5 times 10, the 3 times 20, and divide it by the number of units, which is the 3 plus the 5 to get a $13.75. So it reflects the actual cost more accurately with this averaging costing. So for purchased items, you take your receipt quantity times the receipt cost, item on hand plus the current, divided by the new quantity on hand. That's going to give you your purchase item. But again, transactions must be accurate and timely. For manufacturing items, it's a little bit more complex. You take your actuals, your component average or component at average, and your burden at the actual hours. That's going to give you a work in process value that then gets re-averaged at the finished goods level. So again, a little bit more complex process. Period costing, another option, where costs are expensed in the period incurred. So the perpetual record is not used. However, we who use MRP know that the perpetual record, the continuously updated quantity on hand, is very important to us. So we have to maintain that from a supply operations point of view. But from a costing point of view, period or perpetual inventory is not used. We do that by setting the GL transactions to no in the 36.9.2, which we looked at in February. So the valuation of inventory and cost of goods sold are calculated based on the physical inventory counts and from purchase order receipts. So we looked at standard, average. There's period costing, which uses the values of incoming and outgoing GL transactions from AP and changes to inventory balances. So the differences are written off as change to inventory value. There's also periodic costing, which calculates the periodic cost based on weighted average first in, first out, or last in, first out, or as we sometimes know, FISH, which is for us in the supply chain, first in, still here. So you really need to understand how you're going to treat that period versus periodic costing in terms of how the accounting process is going to handle your on-hand value. There's also periodic costing, which calculates that weighted average average in the FIFO. It is a fairly complex setup, work center rates, cost adjustments, etc. So if you're going to use it, you really need to understand what you're doing with the periodic costing. There's also project realization management. That's used by some organizations. This gives you a nice set of tools that allows you to plan schedules. You can buy materials directly to projects or use materials out of inventory, and it keeps track of that material that's transferred. So if you're in a product or a project type environment, PRM is a good tool for you. Cost sets are basically the cost management tool that allows accounting to look at standard, current, and simulated types of cost sets. So it's a collection of related cost files. It affects the general ledger. General ledger typically use standards, although you can use average costing in a general ledger. And it supports both standard and average costing options for GL transactions. So cost sets have unlimited number of cost sets. I've known cost accounting people who have 50, 60, 100 different cost sets that they use in planning and estimating and analysis of cost history, etc. There's an unlimited number of cost elements, as we saw before in the cost element maintenance, where you can make for duties, freight, etc. So you use cost sets basically as a what-if analysis for cost planning and cost history. You can use it for budgeting, budget first quarter budget, second quarter budget, half year. You can project futures cost based on MRP explosions. You can have historical costs. I know a lot of cost accountants will go out and create a cost set for what was the picture of inventory value at the end of January, the end of February, the end of March. So these cost simulation sets are very conducive to the ability of the cost accounting people and the inventory supply chain managers to keep track of their costs. So you set up those costs in 3013-19. You set up as many as you want. There's basically the 4 types of cost, either current, general ledger, simulated, or the periodic costs that we saw. The cost methods can be either standard, average, last, none. And then with the product or periodic costing, you can have your weighted average, FIFO, or LIFO cost. And these are controlled in basically your inventory control file, your 3.24 or your 36.9.2. And we'll look at cost levels and cost categories. So the cost sets, as we said, are basically 3. There's the general ledger, which is usually the standard. There's a current cost set, and then as many simulated cost sets as you need. Based on the bill of material, that's going to keep track of your level costs at this level or lower level costs, which are the roll-up from your 13.12.13 or your 14.13.13, the standard costs and routing roll-ups. And then you've got your 4 cost methods. So standard is normally what's going to be used for your general ledger. You can have average, or average can be either last, none, driving into the current, and then you've got your simulation sets. So the current costs, as we said, are defined in your 36.9.2 or your 3.24, and there you're going to set up your average cost, which is basically just a simple weighted average calculation. You can have a last cost. I know one of the buyers that I used to work with liked that last cost because that's what he used to set his standard for the next year. Or I've seen many organizations that use QAD that have none. They don't even bother to keep track of the cost. The averaging cost company down in San Diego, they don't even use that. So in the inventory control file, this is where you set up those values. You can also set how it's going to report. You can set how the current cost is going to be updated, or you can update it from AP. If you generate general ledger transactions, that's normally going to be for a perpetual inventory record we saw. And then there's a setting for transfer clearing, which is moving material between sites in the same entity. You can also set summarized journals. No, if you don't want summarized journals, you can set how you're going to generate the transactions in the GL, and then we'll talk a little bit about mirror accounting in a default site. So as we saw, this 30.17.1 is where you define those cost elements. So if you want additional cost elements, I remember one organization, we had to track royalties because we paid royalty to some scientist who kept track, and every time we sold it, we had to sell, we had to give him money, and so we kept track of those through that. The simulated work center rates, you can play around with your work center rates in those simulated cost sets. You can update those cost sets by percentage rate, either in your setup or run rates. Then you can run your simulated cost roll up, and you can do that both in terms of the routing and the bill of material in your simulated cost sets. And then there's this nice little 30.46 gives you a comparison between various cost cost sets. If you've got a simulated versus a standard, you can look at the variances. Then 30.3 is where you're going to copy from a simulated cost set or a current cost set into your standard cost, or you can transfer between simulated cost set to simulated cost set. There's just a whole bunch of different functionality that allows you to manipulate those cost sets and look at the various changes that might be done from work center rates to inventory to purchase cost and so on. Mirror accounting is another inventory affecting accounting function, and this is used by several European countries, Belgium, Luxembourg, etc. And this is to ensure that the inventory transactions are reflected immediately in the income statement, because those European countries have the requirement that they need to know exactly what their income and balance sheets are on a day-to-day basis. So this allows you to analyze purchase movements. You can apply mirror accounting to just your inventory or other transactions, and it basically sets up a link of source to mirror income accounts. So you set up a day book. Won't get into a discussion of that, but set up your day books. And then in 3.20.7.1, you generate your mirror GL accounting, where you can set up the translations between your debit and credit accounts in source versus mirror, or you can set it up so you can mix those source versus mirror accounts. So it's an extremely flexible tool that you can use for that. And then you've got a mirror accounting report that you can run, and it gives you results of those. In the newer versions of QAD EEs, they give us this new obsolete inventory analysis menu. And this is really cool because most of us who have been in supply chain, what do? We run a browse, we export it to Excel, we play with it in Excel, we try and figure out what we're not using, what we should be using. This gives the supply chain user a great handle on what to do with obsolete inventory. And you can extract inventory consumption data. You can use the quantity on hand either by date or GL. It calculates supply coverage. It calculates demand. It'll actually calculate a reserve for you, which is one of the things accountants like. And then you can produce various reports. So the setup is basically pretty simple. You set up inventory types, you set up a depreciation rate maintenance, and then you can output information into a file on your server, and works great, except like we always say, you got to have accurate and timely data in order for it to make sense. So in the obsolete inventory control file, we can set up inventory type logics. We can say what we're going to use in terms of conflicting types. We can use ABC analysis. This is one of the important ones that I've found is last transaction extracted, because you want to know where you are in that process. And then you can define which transactions you're actually going to use to calculate these. So inventory types, you set up groups of part numbers that are going to fall in these inventory types. Then you use this depreciation rate method to actually tell the system how many periods you're going to use for depreciation, what the rate percentage is. So it calculates that obsolescence based on, well, you define the usage. So you extract the information in 3.5.1.7. Can be either initial or incremental. You can exclude or include either customer consigned or supplier consigned material. And then it gives you this last transaction executed, so, or extracted, so you know what values you're dealing with. And then 3.5.1.9, obsolescence analyst, you can run this analysis code for any period, a month, a year, a quarter, last year, year and a half, and this then extracts that inventory data into a file. It uses the quantity on hand balances, calculates, as I said, the supplier coverage, the demand, and then calculates your reserve. So this is much better than a spreadsheet, again, if your data is accurate and timely. The other new functionality is what is referred to as days on hand analysis. So you use these programs to extract data and create records that are used to calculate accurate days on hand. How many times as a supply chain manager or purchasing manager or inventory manager does a boss come to you and says, how much inventory do we have on hand? You know, we're running out of money. We need to put some controls on it. So this is a nice, easy tool that you can use so you can do that days on hand analysis. Again, as we saw with the obsolete inventory analysis, your data must be accurate and timely, which we've talked about. Here's the build of the days analysis. You've got several selection criteria that you can use: items, buyers, product groups, suppliers, etc. That is then you can include again, consignment inventory or non-nettable if you want to not consider MRP. Then you set your horizon dates. This is very flexible, good tool to give you a picture of where those days on hand are going to change out across the horizon. And then this gives you a nice little report that tells you what has run and where it's stored and where the data is. So the days on hand by item, nice little browse, gives you a whole bunch of information that you can use to do that analysis. If anybody has done a days on hand analysis with a spreadsheet and browses, you know how difficult that can be. Here you've got horizon days, horizon work days, horizon demand, projected quantity on hand, days on hand, lots of good information for that. Again, accurate and timely. There are a whole set of views that are given to you days on hand. If anybody has used the views or the collections that are available in the EE versions of QAD, this gives you basically a report that's made up of a number of different browses, and you can look at it by commodity, by date, by site, by buyer, lots of different ways to look at those days on hand. Regulatory affairs, which is one of the things I didn't get a chance to talk about last week or last session in February. This is the module that allows company to manage compliance. As a matter of fact, it used to be called compliance, and now it's called regulatory attribute control. If you have good manufacturing processes, for those of us in the FDA environment, for NAFTA, GAF, international agreements, these are becoming more and more relevant to the supply chain. So if you deal externally outside the United States, or you deal with one of these governmental entities, which as far as our president is concerned is going to have a lot of processes that are going to be newly under control, you use this regulatory attribute functionality. So you can set up regulatory attributes. We'll walk through the control file. We define inventory attributes. We can look at work center, batch control, work center attributes for those that are familiar with 1611, the attributes for work orders, assay, lot numbers, etc. We can set up lots and groups of lots. We can control how we issue components and consume materials, and we'll talk just a bit about controlled substance. So with regulatory affair, first thing you want to do is set that to yes. So that activates the work order attributes, expired inventory transaction controls, etc. You can control if you're allowed to modify issues or co-and byproducts. Depends on what organization you're dealing with. There's the lot control level, 0. You allow anything One, you got to have a unique item lot combination, or number two, which is typical in the FDA or life science arena, you have to have a unique lot serial number. So if you've got two, it's going to add a whole bunch of transactions, but you might be required to do that. You can set up whether you're going to use a single lot for receipts of purchase orders, work orders, advanced repetitive, etc. And you don't need to actually have compliance active. You can have lot control for some items in your inventory. If you use either one or two, you can go ahead and use this lot control functionality that's available to you. The item master controls how you're going to use those. You can either have blank, which is no lot serial control, or you can have lot numbers, which means you've got a group of products off a work order that they have a common lot number. Or you can have a serial number, which means you've got a unique identifier for each end thing that you make off of a work order. You can use the system to automatically create those lot numbers. If you check your auto lot box and then you define your number range management in 362221.1, you can have the system automatically create that. And I've worked in several organizations where you've got specific lot numbers for specific sites for work orders versus purchase orders. So it's very, very flexible tool. Lot master maintenance is where you're going to control the assignment of lot numbers, or you're going to modify or delete master records. There are six user fields: date, character, and decimal fields that you can use to assist you with lot maintenance. It's usually recommended that you don't create lots with lot master control, because you lose that order line functionality, which helps with traceability within the system. So if you're going to use regulatory affairs, you become very familiar with this lot master. 1.22.4 is where you can set the defaults for your work order attribute maintenance. That, if any of you, again, are familiar with the 1611, the work order receipt file, that's where you set your attributes. You can override those defaults. Controlled substances is another sub-function of regulatory affair, and I want to say again, with the changes that are coming towards us like a freight train in terms of supply chain, there's going to be a lot of requirement to know where you got product, when it was produced, how it was produced, where it was produced, and controlled substances assists in that process. It was written primarily for the Controlled Substance Act, which addresses narcotics, depressants, stimulants, hallucinogens, antibiotic steroids, and you'll find many more. These are defined in the healthcare industry numbers, export classifications, harmonized tariff codes, etc. So this controlled substance allows you to control that information within QAD, not outside in some access database or some spreadsheet, but actually inside QAD. And as it says, the managed control doesn't affect the functionality of other modules. So you can list regulatory agencies, linked regulatory control numbers to address codes and sites, associate regulatory control numbers to inventory items, record general ledger and information within QAD for that requirement for controlled substances. So you can add your controlling authorities, NAFTA, FDA, etc. You can tie those control numbers to those various authorities. You can input your license information. So you put information regarding license numbers and control. You can tie that to inventory items, and then you can tie individual licenses to inventory items. So it gives you a whole bunch of flexibility in terms of that. Item replacement, this is a relatively new functionality. This allows you to set up, as you're entering orders into the sales order process, to have systems in the background actually recommend to you replacement items, upsell items, or cross-sell items. So you can set it to automatically do that. You can round up the quantities depending on what those quantity pairs of the replacement, upsell, and cross-sell items. And then you can define whether you're going to do that for the shipped to or the sold to in terms of how that's going to function. So you set up your item replacement functions in 1.23.1. In 1.23.5, you set up your item upsell maintenance. And then in 1.23.7, you can do cross-sell. So you recommend that. So here's just a quick example of what that means. Here I've got a sales order. I'm going to sell a particular item, in this case 01040-001, and it asks the questions, or you want to change that item number. So you give the customer order people that option, and the system automatically replaces the 001 with the 002. You can do cross-sell, and that'll give you up a little pop-up screen that gives the order entry people the availability for that. So as we find ourselves trying to maximize our revenue, we can see that those item replacement, upsell, and cross-sell functionalities may be a tool that we want to look at. And then finally, which I've been after for many years, QAD in the later versions, I think 227EE and above, are now giving us the capability to ship and create documents within QAD for non-inventory shippers and shipper information for non-sales functionality. So you can create a memo item shipper without GL or inventory balance update. Boy, I love that. How many times have we had spreadsheets and Word documents and access databases to keep track of that stuff? Now it's inside QAD. You can combine multiple lines on the same shipper and legal document sets, which is a mandatory requirement in some foreign countries. So you can define what those non-sales shipping information is in relationship to the shippers that you're going to use. If you change your mind, you can unconfirm those shippers, either using 79121 for the actual sales order, or using the 315.2 to do the unconfirm of this non-sales shipper. So here's the non-inventory shipper maintenance. This is the one that I love. You can actually create a shipper for a non-inventory item, and it gives you a nice shipper as opposed to a Word document or whatever. So again, totally integrated into QAD. So there's lots and lots of tools that 32Soft gives us. Custom item master, inventory updates, lots and lots of loaders and functionality. So if you got any questions, you can go to that website that is referenced on the slide, or you can call Alex or Denise or myself or Nancy and get some information on how these data loaders can help you with utilizing a lot of this new functionality we find in QAD for inventory management. So covered a lot of information. We talked about standards, average, cost sets, mirror accounting. We looked at the obsolete inventory analysis and on-hand data analysis, which I find very, very helpful as a supply chain guy. We looked at regulatory affairs, controlled substance, item replacement, and non-inventory shippers. So that is about 45 minutes. So I'm going to turn it back to Miss Denise. In July, we're going to cover purchasing. We've had 2 sessions of purchasing earlier in the year, and now in July on the 22nd, we're going to cover some purchasing cost consideration. We'll look at purchasing supplier, just touch briefly on evaluated receipt settlement and global tax management purchasing. We'll talk about logistics accounting, accounts payable, supplier performance, look at the supplier portal, and then some reports and utilities. So hope you have the opportunity to join us on July 22nd. So, very good, Denise, you want to take it back?
We did want to let you know, well, Don did let you know, that we do have QAD purchasing coming up next, new ideas and practical tips on July 22nd, and that is followed by QAD SSM, material orders, returns, and pricing on September 23rd. There is no August webinar because we do take a summer break during that time, but links to register for the upcoming webinars are available on our website and at the bottom of all of our communications. To circle back to inventory, here are some of the more obvious benefits to good inventory control, which I'm sure about everybody here is familiar with. Essentially, good inventory management gives us the ability to make more profitable business decisions, which certainly is critical, and we should never underestimate the influence inventory has over profitability.
Yes.
So with that, Don, do you have anything else before we wrap up for today?
The only thing I wanted to mention, we got a quick note from Jeff Shelton, who is the project coordinator for both the Midwest user group and the West Coast user group. And the Midwest user group was originally going to have their MUG meeting the 25th through the 27th of September in Grand Rapids, but I believe that the board of directors of MUG has determined that they are going to attempt to have a virtual conference, and I would be willing to bet that we might find that same set of circumstances with the West Coast user group. So again, with COVID, we're all in a state of flux, and flexibility is the essence of mental health. So
yeah, for sure.
We will see what MUG and the West Coast user group have to offer us in the fall. So we're looking forward to it.
Yep, that is why I didn't put those up on my slide, because I wasn't sure what the status was, if it changed. So
I don't think anybody is.
Yeah,
we'll ask Dr. Fauci, see
see what he has to say.
Yeah, let's see what he has to say. So.
Okay. Well, as always, Don, thank you so much, and thank you everybody for your time today. We certainly hope you will join us again next month. And until then, have a super day and keep safe and healthy.
Yeah, wash your hands.
Thanks again, everybody.
Bye-bye.
Bye-bye.